Welcome to the Numisphere, a podcast diving into all things in the sphere of numismatics, talking the latest news and trends of precious metals, coins, currency, and more. Let's start the show.
Welcome on into Numisphere, where we'll be talking about Chronicles of a Stacker. Here today I have my special guest with us, Bryan. Bryan, thank you so much for coming on down to the show. We do appreciate it.
Yeah, good to see you again, TJ. Love the new studio.
Oh, thank you.
Good job.
Much.
Good job.
It doesn't look too bad, does it?
That's great. Well, good job.
Not too bad for a couple of coin guys, right?
That's right.
Well, today we're going to be talking about something rather important. We're going to be talking about stacking as a way of a financial habit and kind of the chronicles that come along with that. And for today, I felt like there was no better person that I would want to bring down and ask about the experiences of than the most avid, diligent, and disciplined stacker that I know, which is you. So thank you again for coming down.
Good to be here and glad to share my story.
Yeah, awesome. So let's kick it off with, how did you even come into stacking?
Yeah, I think we all, those of us who, a little bit older in age maybe, but we remember the 2007 to 2010, the Great Recession, and I really, during that time, I think like most, lost a fair amount of money. And, in my job, I deal with information and data and, at a very large level. So, during that time, I really just, I was like, I can't afford to really take that hit again. So I really wanted to just take the time and invest in that education.
If I remember correctly, some of the statistics that were thrown out for that time frame, portfolios were almost halved. I think the average loss was something around 45% of overall portfolio value that basically went off into la-la land. It was evaporated.
Right. And so that at that time, when people like, we've talked about this before, TJ, when you lose that much, say you lose 25 or 30%, you have to double that to get back to where you were at before. So if I lost 30%, I have to do 70%, 60% to get back to where I was at prior to losing all that. So it's it kind of scares you when you start looking at
it does
historical data, what happened, looking at today as well, very similar.
And just knowing like the number of years that it took to build that for yourself, for your portfolio. And I know that there were so many families and people that were affected. It was across the board. But basically it was that event that made you say, this is not working.
Yeah.
There's something that's not working here, and I'm definitely at the disadvantage. How do we make that different, right?
Right. Yeah, and I started on that journey. I think because I was a consultant, so I'd spent a lot of times in my hotel rooms, and I didn't really go out that much, and so I'd spend that time just reading books, watching videos, and trying to figure out what that one thing would be that would stand the test of time and keep its value, and knowing that I'm just a normal person like anybody else, paid my way through college, paid everything, so I was really looking for that magic information or piece of information that could really just help me understand what happened, right? But only, how do I prepare for the future? Because,
but it's interesting you say that. What happened and how do I prepare for the future? And you're tying those both together.
Right.
And I think that that's extremely important for people to bring into their process of decision making, is to be able to look upon the past, to see what's happened in history, and then to look towards the future and what is painted on the wall. Is something cyclical? Is it going to be repeated for us? It certainly feels that way a little bit with some of the statistics that are out there now.
Right, and to your said, past and in the future, you get the boom bust cycles, right? And you really started getting into that, but I'm like, well, why is that, and how long has that happened? And educated myself, and I read The Creature from Jekyll Island, right? That's
probably one of the biggest turners of minds in the world. Is that one book when they hear about how the Federal Reserve came to be, and who it was that was around that table, and some of the things that were said, and some of the things that were constructed for us.
Yeah, and just think of all those decisions were made just with a handful of people, which we the Rockefellers, Vanderbilts, Rothschild, Chases. It's the same people, same banks today. So it's interesting to go back and to find out when that boom bust happened as I went to that journey, and I found out, well, that was really only a thing of really after, I mean, they had boom busts like, you hear of a lot of craze,
Mhm.
in the past, the orchid craze, right, and things like that
Sure.
happened, but very in a very, but it wasn't all the time. It was that's like a point in history where we have like, the up and down the 70s, the 80s, the 90s,
Sure.
right? The .com, the
Yeah.
housing boom, right? And so we had these cycles, and then finally I realized that, I through reading and tons of YouTube videos
Sure.
and obviously a lot of great videos like here on Dubisphere and others, right?
Yeah.
I realized that two there's two there's two types of economies, right? That can
Okay.
be ran two different ways. Keynesian
Sure.
economics and Austrian economics.
Right.
And I was like, what's the difference, and why don't I know the other?
Now,
You
so forgive me if I'm wrong, but Keynesian is designed. Its economic teachings are designed around a fiat currency system. Is that
Absolutely.
correct?
Debt based,
Okay.
absolutely debt
So
based.
in the Austrian version, utilizes money as in an actual source of value, utilizing precious metals or assets.
Assets, yeah, absolutely. So yeah, something is based upon a debt, a promise,
Right.
and one's based upon a real thing.
Right.
So that was my first journey as to, well, when did what was the America? I thought we were gold backed. I thought we were, I thought we had all these things, and
Yeah. Yeah. It's amazing though when you start to learn and you're looking at the facts and you're trying to go deeper and you're trying to go further back as to why these things came to be. It'll give you a headache to try to keep up with how things changed hands, how the debt structure came to fall upon the United States, and,
Right.
and how it is that we came into the debt dollar that we utilize now and that we're under right now, not just in the United States, but in a global economic scale.
Yeah, and then you start looking into it, and you can see, well, how did we get to this place? And it's slow. It's a slow. 1933, the confiscation of gold.
Absolutely.
1960, 1965 was the last year that silver was in circulation, right? And then it dwindled a little bit till like 1970, 71 with a couple more coins.
Correct.
In
Yeah. It was
71,
64, we had 90%.
Yeah.
65, they did away with that.
Right.
And then we had 40% clad in the half dollar from 65 through 70.
and we all know what happened in August 71, right?
Sure.
That we were temporarily, I'll say temporarily, taken off the gold exchange, right?
Yep.
By Nixon.
Yep.
And reading into that and looking at Francis de Gaulle, Charles de Gaulle in France. Where
Okay.
he was going, and he saw it from his angle. He saw it. The Americans, the U.S., they're spending a whole lot of money, and they're supposed to back it all with gold. So they started changing in their dollars for gold.
Okay.
Then Nixon, of course, he said, "Oh, I got to stop this gold window, this exchange because of speculators." I'm like, these were sovereign nations that were
Right.
asking for their, and they saw that. So I think that was kind of a key
Yeah.
point
So
in history.
you're looking at all these different pictures in history, and,
Right.
and what is the common denominator across this? When you're seeing all these economic shifts, what's the common denominator? It sounds to me like gold.
Yeah, and it's I think every time we're seeing a fundamental shift. You can go back to 1871, we went from silver to the gold back. So people who had silver all of a sudden were the losers, and people who had gold, which were the people were the benefactors. And then you had
Okay.
33, which again, if you had, it was again, you just fundamentally you got worse every
Right,
single
right.
time, and it's slow and it's methodical. And again, it's what countries don't have central banks today.
Yeah, it's funny. I just want to stay on this for one more
Yeah.
second here because I'm even thinking back to silver. From my understanding, silver's been manipulated all the way back to the Coinage Act of 1837, if I'm not mistaken.
Yeah.
The idea being that at that Coinage Act, it stopped the ability for people who had mined silver to turn that silver ore into United States dollars through the U.S. Mint.
Right.
And that service was ended. And from that point forward, there was a kind of, by default, gold standard that was being issued.
Right.
And that's what was leveraged all the way through until we saw the Federal Reserve come to play.
But one key thing that I always go back to, and which they never bring up, and which few people know, it's, well, what defines a dollar?
Right.
It's what point, don't quote me on this, but it's like 0.397 fine grains of silver.
Right.
That's in our, that's our book, that's our Bible, that's the Constitution. So,
Right.
in everything else from that, you have, gold was a derivative of silver.
Mhm.
Then you have the certificates, were derivatives of gold and silver. And then you have dollars, are derivatives of gold, which are derivatives of silver. So
Right.
and then you have derivatives in the stock market, which are just, the same thing. It's just you're just diluting the money supply. You're making things more available,
Mhm.
right? And if demand's good, great. Then but if demand's not good, where do those dollars go?
Right.
They come back, you know.
So you're sitting here, you've seen all this history, you're
Yeah.
getting the snapshots
Mm-hmm.
together, and you want to make a change for yourself. You're trying to make sure that you are not exposed to the same risk
Right.
that you were exposed to during the Great Recession, and how to be at the best advantage you can. What is the conclusion? What did you come upon as the new financial habit that you were going to include to make that difference?
So yeah, my conclusion was really there was one thing that was consistent throughout our history, in everybody's history, not the U.S., but look anywhere, and the only thing existing today, it's gold and silver that were always been monies at some point, or always been part of a reset. So if something got bad and the fiat currency got crazy or went out of whack, then
The
it was
default was to go back to a value or a derivative value
That's
of
right.
the precious metal.
then they would fall back to whatever was working before. I think it's easy to do. You start here and you end here, and well, guess what? Well, we really worked really good back here, so let's go back. Let's work our way back to that. you know, but
So you find this conclusion. You come upon
yeah,
gold is the answer. How did you start out? What did you do as somebody who has come to this conclusion and wanting to make that change? What were the steps that you took?
Well, I think getting past the the anxiety that comes with it too. Once you realize too, and some people realize more than others, right? They realize, oh wow, when this is the big issue, and I got to start now, right? But what I did is I wanted to, I didn't want to tell my wife. I just wanted to do so. I wanted it to be a hobby, more. I just wanted to get into it and understand it. So I just stopped going to like a donut shop in the morning or a coffee shop, and I would or save my lunch money, and I would go
Right.
down to a local place in Milford, which your father,
Okay.
Mark Bruno, right? And
Yeah.
back in the day, that was, I remember it was December 2011. And
Okay.
I was working I was working at a company in Milford here, and
And
there
you
was
stopped by the shop?
but I got
That's wonderful.
one silver eagle,
Okay.
one silver eagle,
And that's what started you off on your
yeah,
journey.
and it just felt good, and at the time I think I bought at the height of the market too.
Okay. That's usually the luck, right?
That's the way it goes. Yeah, I think 2011, right? I think we could
Right.
all agree that it was up to over $40,
Yeah.
and that was my first one, and I did that every week. I would just do one coin a week,
Okay.
and then from there I just started, just adding to it, little by little, and again it was just as little as $30 a week, or even less. I mean, you could. So my whole thing was just adding to it, and over time, what I've been able to see is. The whole thing is not losing, right? I don't come from a family of means or anything like that. So, you work hard, you want to keep what you make, right?
Absolutely.
And, I look back now, I've been stacking for 13 years, going on 14 years of stacking. And basically now I look back and I started looking at, the price of, this up and down. But
Sure.
for me, I've been easily been making 9% on average every year. And that's with no counterparty risk.
Wow.
I know. But you just look at.
So by buying consistently with the ups and downs
Yep.
throughout that period, 2011 all the way to current, you're taking a look at your costs.
Yep.
You're taking a look at liquid market value,
Mhm.
and you're up 9%.
9% year over year.
That's pretty
Yeah.
solid. I mean, that sounds as good as some mutual fund portfolios, right? If not better.
It beats everything. If you look at gold and silver, like historically, and you look at the stock market, S&P 500, I mean, it doesn't, why would I take the risk of that when I have something that I really don't have any risk? I mean, and,
Right.
there's some up and down, but that's
Now
me.
you said no counterparty risk.
Mm.
Talk to me about that.
Mm.
Talk to me about what counterparty risk is and what having none is as an advantage.
Yeah, so if you take a look at like the stock market, they have something called derivatives. It's a bet, basically. Derivatives are just a bet. I bet something's going to go up next month. You
Sure.
bet it's going to go down. We agree it's a bet, and the winner takes all. So somebody is always losing in that, right? So I'm investing. I'm doing that in air quotes, but I'm speculating
Sure.
that something will be, and I'm looking for a bet. I'm looking for somebody to take that bet on the other side. And you have plenty of guys that will, and that's a whole nother discussion about who takes that other side of the bet.
Yeah.
That's they're supposed to be investing for you, but that's another. But no, and really counterparty risk. Getting back to that, it's when I buy gold or silver or platinum palladium for that matter, I mean I just have it. It's just mine. And when you look at like just the cost of like, let's go to silver, right? It's studying today around $23, $24, whatever it may
Sure.
be. The cost of manufacture it to mine it and get it to me is minimal. So what's my anybody who looks at money, or what's my downside? What could I lose? And
Right.
I'm looking at that going, why wouldn't I?
Right.
Why wouldn't I? And so the counterparty, that's what, and I think that's most people are involved in counterparty risk, in
Right.
derivatives, and they just don't know it.
They also don't need to call up their agent and say,
Right.
hey, sell this, and can you make that into my account? And it usually takes like 7 to 10 business days before you get that check that you can deposit into your account.
Well, you know what? You make up a really good thing, TJ. On my journey, right? And I saw that I wanted to use my 401. I wanted to, do some adjustments to it. And
Sure.
some of that took 7-8 months to get out of.
Wow.
So, I mean, I did. I mean, I'm true to my fashion. I wanted to truly reflect my beliefs. But but first I went to my money manager, and I said, hey, I want to invest, in precious metals. And he just didn't have a product to sell. And I think that's what you find with a lot of them. There's no money in it for the brokers.
Right.
Without your money, they're broke. Brokers.
Valid point. It just amazes me, right? It's your asset, right? And then when you have zero counterparty risk and you're custodying your own physical precious metals, it's simply turn of a dial on a save for going to that secret place to pull out a portion of your stack, and you can liquidate it at will.
Yeah,
it's really not too hard to do. I mean, you can do it at shops like this. You can do it amongst peers.
Yes.
There's a lot of people that are seeing the value of precious metal and utilizing that in commerce.
Well, it's not complicated. It's just,
Right.
a lot of people go, I invest in gold and silver. And I say that in a way, but I really don't. It's just money.
Right.
So I do like any good person does with money. I hoard it.
There you go.
It's just money. It is the definition of money.
Right.
So, I think that's what also in my journey, words are important, right? So there's currency and there's money. The two aren't the same.
Right.
So, and then just looking at that and historically over time, it just reinforces that the idea of what money is. So I think that's key. And when you get Austrian and Keynesian, a lot of people do all this thing, but they just don't really get it. Like, this is money. So
it's funny to me because you take the perspective of what brought you into this, the impact that the recession had on you financially, and then you look at where you are now. It sounds like you've solved your problem.
Actually, and it takes a lot of the stress out of it. We as individuals in the U.S., we tend to give away a lot of things. We have a guy to do this. We have an investor. We have a mechanic. We have this. We have that. We do it with our money too. We naturally just give it away for somebody to do. But the crux of it all in my education of myself, it's simple. There's nothing more complicated besides all you're doing is converting your currency into money.
Right.
And you can just go back on that. And no matter what it is, it always has value because it took a level of effort to go mine it. Well, explore to go find it.
Sure.
Right. Get the permits and
Yeah.
God knows everything that goes along with that. And then getting the people, getting the infrastructure and all that.
The equipment, the capital. I mean,
That's right.
it's huge expense to pull that out of the ground.
Absolutely. So it's a reflection of all that labor. And getting back to that kind of like my education and why I got here. It's like I wanted that one thing that keeps its value. It keeps its promise.
Right.
Where I hold a dollar bill that's lost 98% thereabouts of its purchasing power since 1913, right? So it's 2 cents or maybe less at this point. But
then we look, of course, at the value of the 1 ounce gold coin where it was in the 1920s,
Yep.
where it is today.
$20.
We always use the $20 mark, right? But it could still buy you, its purchasing power
Mhm.
would be a nice suit, right? You
Yes.
could do it back in the day in the 20s. You could do that with a gold piece today.
Absolutely.
And that's definitely, I think, one of the loudest things that can be said about precious metal and its retaining of purchase power.
Yeah, and I sleep well at night.
Yeah.
And I do what the bankers. I mean, I don't do anything different. What I found out ultimately is just to watch what the bankers are doing, not what they're saying, what
Right.
they're doing.
Right. Where's the money moving?
Right.
Well, we've seen some recent activity in the markets,
Yes.
right? I think I just shared with you over the weekend, we caught news that there was a short position that had been built up over years, decades. And within one trading week, we halved that short position, and half of those shorts were liquidated out of the market.
That to me has hit a lot of folks who are fellow stackers or in the commodities realm. I think everybody took notice of that last week, and
That definitely yields some curiosity for me about what's to come in the near future.
well, I think getting back to where I think I texted one of my friends the other day, and I said, it makes sense to me why they're doing this, because what I'm looking at the Asian market, and this is just me looking, but what I've found in like the Shanghai Gold Exchange and stuff is they're willing right now to pay over $2 more per ounce than the West is.
Right.
And well for the gold. So
Yep.
unless that equilibrium comes, I mean, prices rise.
Right.
I mean, it's just going to go east. All the metals. So
Right.
I expect it to come up, and I think all the charts and graphs, and like you said, the short position was now, which is, people are short position means what? I think it's going to go down.
Right.
Right.
And if those shorts are liquidated, it's an indicator that the banks would be taking on a long mindset toward silver. That's what interests me most. But I digress, right? So with all that, it really sounds to me like you have freedom.
I tell you what, I got one thing I wanted to basically say is 4 words that I live by: be your own bank.
Be your own bank.
I had a lot of good mentors, who over the years in my journey that basically said be your own bank, and I really never understood that. I mean, it sounded good, but again, I'm buying a coin a week.
Mm-hmm.
What am I going to do with that? But over 10 years and over time, actually, it makes sense now. If you want to start a business or use that as leverage against the loan, where you can buy a company with your assets you have, take out a loan, buy a company, then it pays you back, and now I get my gold and silver back, and now I own a company. I mean, it's just things like that you can do. There's a lot.
It's impressive.
Yeah.
It absolutely is.
Tax
and it's
implications.
about moving that value around. There's just so much ease.
I control it.
Right.
I don't need to go to somebody. I don't need to talk to somebody.
And that's the counterparty risk that you've avoided. Would you say that's your favorite freedom that you've pulled out of the precious metal?
Absolutely. Absolutely. Just, it's there's no counterparty, and I'm 100% in control. But I think it's just that simple education. Just understanding there's different ways of money can be defined,
Mm-hmm.
used,
Mm-hmm.
and also finally manipulated too. So,
Right.
I think as well as I know, there's plenty of eyebrows raised.
There
around
is. Right.
manipulation.
I'm always trying to be careful about what we say on the show, but
Of
there's
course.
definitely room for many, many questions to be happening amongst the public right now.
Well, when you take a look at derivatives, like anything else, is the potential there for manipulation to happen with short positions?
Right.
Of course there is. Just like anything else, any other commodities, So, it's there, yeah. I mean, is there plenty of, legal things about that happened over the past 2 years that caused banks a lot of money because they got caught right in the cookie jar?
So with that being said, we are in the middle of this geopolitical scenario,
Mm-hmm.
lots of debt building on ourselves. It doesn't look great for the global economy, not just the United States economy, but specifically the dollar, what's going on with the United States. What do you see the role of precious metals being in the global economy in the future?
Well, I think we're at the end of a cycle. We talked about cycles, boom bust cycles, right? We talked about, and if you look where we're at, debt to GDP.
Mhm.
So basically, how much debt to how much we actually make per year. We're roughly, I guess, I tell everybody to do your own homework, but I believe we're probably on 130% of debt to GDP. And
that's growing every day.
Is. And history tells us that anybody who goes over 90% debt to GDP defaults. So that to me was, and you see that, we're all in it. I think China's in it. Everybody's, well over that mark. I think China, again, like probably 300%.
Right. This isn't just a United States specific problem.
That's right.
I think every country across the G20, all of them are in debt.
Right.
Not one of them is in the surplus.
Right. Historically speaking, it's been like the Weimar, Zimbabwe, or Brazil, Argentina, right? You have all these, these hyperinflations going up, and I think to me those were just indicators of a weak economy and obviously a weak, government. Obviously, corrupt governments or governments not as on the up and up as they should be. But I think we're at that time now where we're seeing everything hyperinflate to some extent. Home, gas, cars.
Sure.
$100,000 truck. What's that about, right?
Yeah.
Who could afford that? But I think we're at a change, and as people say, end of the cycle. But I also say it's a beginning. I think and now we just, I think of it as a mantra, and it's dynastic wealth. It's one of those things. It goes beyond me. It goes to my children. Goes to my children's children, right? And really, if looking back at history and looking what happened, everything smells really similar. And to your point, you said this is everywhere. This is worldwide. We're all having it. We're all connected.
Absolutely.
We're using the dollar, world reserve currency. We have the BRICS coming in. They're basically we have BRICS tokens. We have
there's a rumbling occurring is what it's alluding to.
Yeah.
So with that in mind, what does precious metal do when this gets shaken up? Where does precious metals fall?
Sure. Well, I got car insurance, I got health insurance, I got home insurance, and now I got money insurance. And what it does, it basically, it's my insurance. If I don't use it, I still got it.
Right.
And I'm still making 9 to 10% every year.
Right.
And if something goes bad, guess what? History says that, there could be a potential. You actually not only can do, you're maintaining your purchasing power. You're maintaining your ability to maintain a lifestyle that you're used to. And maybe even better,
right.
Because during this time, if you notice the ones who are, the dynastic wealth, the Rothschilds, Vanderbilts, and so forth, they understand that these cycles, that homes go up and homes go down, and there's these little balances. So my goal was to ultimately be heavy on something that's undervalued, and not be so invested in things that are overvalued.
Okay.
And then when that switches, then, obviously, you can shift some of that stuff over to now something that was overvalued now is undervalued. So
that can be a difficult game.
It's a very long...
And that itself comes with risk.
You know what I found, though, more than anything, TJ, in my tenure, and I got to say, everything else, it's patience.
Yeah.
Patience, because I think we've been taught in our entire lives just to, investing and making that profit, investing and making the profit. This is basically you're sitting down. If you want to, I always, like the banks and rich people, they go, yeah, I'd throw 20% of my total wealth into precious metals, and then I could be stupid with the rest because I got this at the side. I could be done with the rest of it, but keep that insurance. That's my insurance. I don't touch it. It's there. I add to it over time, but again, it's my insurance. And it's very simple, too. So people can continue to speculate into the stock market like they do.
It's a risk reducer.
Yeah, risk reducer, yes.
A risk reducer. All right, I got 2 softball questions for you so we can wrap this up here. Softball question number 1. What is your favorite precious metal today and why?
As far as a coin?
Precious metal.
My favorite precious metal, silver.
Silver.
By far.
Why?
Well, out of all the assets since the 1980s, it still hasn't hit its 1980 high currently. So it's the most undervalued from an industrial aspect. It has a strategic industrial aspect to it. With the electrification of everybody's up to, it's all silver. I mean, silver is the binder, and so all these things is what makes me love silver more than anything else.
Absolutely. And of course, we have the ratio that could potentially correct itself to the historical trend, right? Back to the 15-1. I think we're trading somewhere around 90-1 right now.
And I think it's coming out of the ground. I think this year, don't quote me on it, about around 7-1.
All right. Last softball question, and then we're going to tie it up for everybody. Is there a too much when it comes to stacking precious metals?
If you're putting your, like, I'd say anything that's uncomfortable, it's getting in the way of you paying your normal bills or anything, that's too much.
Valid point.
So otherwise, to me, it's a savings.
If you aren't able to repeat the action in a consistent basis as a part of your financial life, you'll end up backtracking, selling out at an inopportune time, and have a negative taste in your mouth.
That's right.
So you can't overspend as you hop in. Be disciplined, have a plan, be consistent.
Absolutely. And you can always adjust with it too. You know, you might make a mistake and do this way, but, and have to sell some back or whatever. But to me, it's just a piggy bank.
Yeah.
Gold and silver.
You learn a lot too. You learn through mistakes.
Of course.
I've done it. I think that I haven't met a stacker that hasn't made a few mistakes along the way. But we're trying to help everybody here avoid as many as they can and make those wise choices. Bryan, I want to thank you so much for coming down here onto the Numisphere. It was an absolute pleasure. I hope that we get to have you back on this show. There's so much more to discuss that we really held ourselves back, folks.
We did.
All right. There's a lot of rabbit holes we could have slipped down, and we probably could have filled another 2 hours of content. But hopefully we'll have you back on the show sometime soon.
Anytime.
Talking about
anytime you want.
Something relative to this.
Love the studio. Love the studio.
Thank you so much for coming in, buddy.
You bet.
Thank you for listening to the Numisphere podcast. Be sure to subscribe so you don't miss out on the next episode. You can find us on Facebook, Instagram, and YouTube at Numisphere. Until next time.